Just doing a sound check. Can everybody let me know if you're hearing me okay? Okay, good. There's just a few people on YouTube, but if you can hear me, can you give me a chat? Let me know that you're hearing me all right. Yeah, we'll get going in about 5 minutes, folks, so we'll just hang out for your quite a close today. Mass liquidation. Looks like all the coronavirus stories finally got to everybody. The algorithms picked it up finally, and off we go. Awesome, YouTube folks. I'm glad you can hear me. We'll be going through this training here in a minute. I'm going to be focusing today on building portfolios since we rolled out the portfolio manager last week. There's been a lot of questions come across the channel, so I'll address all this stuff. I've got a PowerPoint I'm going to go through, and I'll wait for the rooms to fill up just a little bit more, and then we'll get going. Yeah, Michael Harder on YouTube. Secular bull market's still in place. One day doesn't make a market. You bet. Hey, thanks for the super chat there. Physics Smith, I think, Mr. V. Thank you. Appreciate it. All right, I'm going to meet you folks out just for a minute, be back, and we'll kick this meeting off. Thanks. So Zoom folks, are you hearing me okay? Just want to double check. Okay, awesome. Thank you. Okay, folks, welcome to the show. Just one last sound check to make sure everybody's hearing me well. Last time we had some issues. All right, thank you. Awesome. Is that you, Jay? Okay, good. He's got my back, I'm sure. One second, folks. I'm getting an echo. I'm hearing the YouTube channel. I've got to block that out. Okay, just make sure that nobody on Zoom's getting an echo, and we should be ready to roll here. So in today's presentation, I want to really focus just on building portfolios. Last week we released the portfolio manager out to everybody. I've got a PowerPoint I'm going to be going through, a couple house cleaning items. We did post a new video that uses this PowerPoint, and it's about 35 minutes long. I'm going to go through everything I went through in that video, plus I'm going through a lot more, and we're going to do some more real-time building of the portfolios as we go through all the aspects of building, and I'll show you how to do a lot of things in here. The key to understanding everything that's here is, and just bear with me, we're still got a lot of folks coming in, so it's kind of distracting to keep this room flowing. But the things that I want to take you through, and before going through the steps that I have on the screen here, there's a couple questions that came out through emails and feedbacks and those type of things. And I want to clarify what this portfolio builder is. Now, some folks are thinking it's something that's going to track your ideas and you'll be able to put in your own prices and do all that stuff. That's not what it is. It's not a portfolio tracker. It's a model. And what I'm going to show you today is how to build the model and then how to track the model and then ultimately walk forward the constituent list once you've built a model. So some folks have tried to set it for the starting of today, and you can't do that because today hasn't happened. You have to remember that everything in WaveTech is end of day. So at this moment, the servers have not updated for today, so we won't be able to see that data until around 5 o'clock New York time, and then around 8:30 Eastern time, the servers will update. All the portfolios will be updated. All the data, they open, high, low, close on all the data, and everything will be completed at that time. So I will go through how you build the model, like I said, and going step by step. So we built a wizard in here, and it's really important to understand that each one of these steps you need to answer, and you'll be able to literally set up a complete strategy utilizing your custom symbols. We do have some pre-built stuff in there, and we may talk about that. I may actually let Jay talk about that, so I'll let him know that he might have to be able to take care of those kind of things. But as far as building a model, for me, this is what it's all about. And one of the goals of releasing this to the public is giving you folks the ability to actually manage your money. I've talked to many of you on the phone, and It's interesting to hear what my original theory was, is that many of you might have investment advisors, and unfortunately, a lot of investment advisors are passive. They're not really delivering a lot of value. They're, I hate to say it, they kind of hide behind a facade of financial planning. Not that there's not a good element there. It's just when you start to talk about portfolio management, this story gets pretty weak. But the WaveTech modeling tool is going to give you the ability to build a constituent list, back test it, see how they act, and then I'm going to show you how to change the constituents and keep it in sync with your actual portfolio. Your portfolio that you're going to be tracking will be in your custodial account or your brokerage firm. And my suggestion is, if you embrace this at a high level, what you're going to want to do is actually open up a separate account just for the portfolio you're going to run. Because it's going to be important. What I'm going to show you today is tracking your balances, making sure that your percentages are right. So if you like the back-tested performance and you want to walk forward this model, you have to be able to match everything. And I'll go through everything here that I'm talking about. So going to the next screen, I'm going to walk you through, I'm going to walk you through the portfolio wizard. We're going to talk about how many stocks to have in a portfolio, matching orders I was just talking about, updating the constituents, maintaining the process, understanding reports, and building and maintaining all of the environment. And we'll talk about a couple things. We won't be going into a lot of detail, but we will be going through the selection process to a certain degree. And there's a lot of ideas, and I'm going to put some ideas out to you folks on how to get a constituent list. There is no right or wrong way. It has a lot to do with your own personal investment ideas, and then we'll go through that whole thing here in just a few minutes. One of the other things that I'll be talking to you about, and this I've talked about before on the WaveTech strategy, but looking at ER ratings, duration rankings, and we'll talk a bit about picking the right constituents. And this has a lot to do with, sometimes you'll find stocks or whatever, ETFs, mutual funds that have already been long in the system for a while, and maybe the returns have already met some of the criteria. And the last thing you want to do is actually put those type of symbols into the database or into the portfolio manager. You actually want to make sure that you're putting items or constituents in the list that have forward-looking possibilities, and you can use in the research area, you can use the map and understanding what the expectations are going forward. And this kind of carries forward this idea, is really developing an investable universe. I'm going to start off with something very, very simple and showing you how to build a 2 or 3 stock portfolio. Maybe you only watch 2 or 3 stocks, and that's all you really want to do with this. And I will show you how to do that. I also do this in the video that we just posted on the Portfolio Expert website, and you'll be able to see exactly what I did there. I'm going to show you how to take constituents out, put them in, do all types of things here. And I'm just going to go on for a while. And then what I'll do is, once I get through a lot of the details here, then we'll open up for questions. And the folks on YouTube, you feel free to ask any kind of questions you have from what you're seeing on this. Some of you may be current users and subscribers to the WaveTech research and management tool, maybe not. You can go there. It's pretty simple. It's kendallreport.com/WaveTech. There's a video there. You can sign up if you haven't already done that. But this investable universe is important to understand is that we want to, I just put an example over here with some basic criteria. So this has to do with screening. So you can go to a stock screener, you can use fundamentals, you can use any type of metric that you want to develop a constituent list. And we'll go through other ideas here shortly, but I just want to introduce you to the concepts here of what's going on as far as the ideas of how to figure out what to put in your portfolio. So let's just talk a little bit before we actually get into the back test. Let's talk about what's in here. And this is probably the most important part of the modeling tool, is understanding the constituent list you put in, the look back period, how the symbols that you put into the manager to how they've responded in the past, and then you can see we'll talk about evaluating, putting in new trades and all types of things there. But there's going to be annual returns. You can compare to a benchmark, so you can see how they perform there. I will go through the understanding of drawdowns. Rolling returns are really important as well, as that's going to give you a good idea of what your strategy is likely to do as you look forward in 12 and 24-month returns. Now, I've talked to you, this tool, just if you're watching, this tool is not for day trading. You can get some trading ideas off it. There's nothing wrong. There's 16,600 plus symbols in the database, so you can get lots of good trading ideas. But this particular segment of the software is designed to actually manage money. So there's two ways to look at what we all do. The first is to speculate, buy and sell, and worry about what the S&P is going to do day to day. And then there's another view, is getting involved in trends, intermediate, short term, and maybe even longer term trends. And we'll be talking to you about that in the next couple of weeks, as we are going to be rolling out the Portfolio Expert software, which is our next level software, to a retail audience. So that's coming out soon. We'll let you know when that announcement happens. So all of these things are important to understand from the standpoint of managing money versus speculating. And once you get this concept down, you're going to see something much different. And one of the things that many years ago when I started this company, I started in 1998. This software is ancient. We've actually dressed it up a little bit. And when I bring up the software, I'm going to show you we've made a lot of improvements. Last weekend, we got a lot of stuff done. And I'll talk about all of that here in a minute. But this is also a long-only process. This was built for investment advisors. 95% of them couldn't go short if they wanted to, because they work in brokerage firms that don't allow certain types of things, and they'd have a hard time justifying going short for a customer. So this is not a speculative tool, but more of a management tool. So it's going to deploy capital, and then it's going to move the cash when it gets risky. And so you're going to see ebbs and flows of everything that, as you use this product, you're going to see it move in, and it's going to be move out. So this is the final part of this part of the presentation, is the power of having this tool is knowing the probabilities. Those of you, I met 95% of everybody that's probably on this call today through the YouTube channel. So I'm always talking about probabilities and things of that sort. And this is important because everything is based on probabilities, and when you're doing these type of analytics, everything is very dynamic and changing. So you're going to see exactly what type of thing. You're going to see the dynamics happen when days like today. Will today affect anything on intermediate term? Absolutely not. We got 5,100 new buy signals on yesterday. Today's action doesn't mean anything to a 200-day holding period. It means absolutely nothing. It's just part of this. What you see on a day-to-day basis and what I cover on the channel and talking about stuff is all the noise in the markets. So there's a lot of us that are trading and trying to figure out what the noise is and how to profit from the noise. In this case, we're in the process of eliminating the noise, and we want to quiet it down. We want to slow down the viewpoint and slow down how the ebbs and flows of the markets are going to affect a longer term income or revenue stream that you can generate by running a portfolio. And that's really what we're talking about here. So the other thing that I on this page is dynamic risk. And that dynamic risk is that ebbs and flows. The models will move the cash. If you use this thing properly, which I'm going to, over the next several weeks, going to be training you how to do. The video that I put up today is going to be, this will be an expanded version of that video. So you'll have bear with me 1 second here. So let's go ahead and bring up the WaveTech tool here, and we'll go through some items. I've got so many things running on multiple platforms running right now. It's kind of crazy on my screen. I'm trying to follow everything here. So a couple things that we fixed before we get into the presentation. Those of you who've been on the tool, you know that the real-time quotes are broken. They're all working now. So all of this stuff is working, showing the ugliness of today. We basically, net, we're up about 0.3% from yesterday's, I guess we'll call it Friday's close. So we backed up a lot today. But you can see all the metrics are there. It was also interesting that we had about 695 new buy signals. And I'm going to use some of these ideas. We're going to thumb through some of these ideas when we start building a portfolio here in a minute. But the other thing that has happened here is in the research area, there were some broken links when you went to, I'm just grabbing some random symbols here. I'm going to grab this symbol here and I'm going to go to research. Those of you that are using the product, you'll see that all the calculations are right now showing you the returns. There's no real-time quotes in here right now. We're looking to add another service to maybe bring back the real-time in here. But this is a modeling tool, so none of this is all that important from the standpoint of knowing what the last trade is. Most of you probably already have that capability around you. So those are the primary things that got done. So let's dig into talking about building a portfolio. I actually have on this account, this is the same account that I did the video on. And we'll go through some ideas. I want to show you how to walk through this, and then when I'm done with this section here, then we'll open up for questions and we'll see what kind of things are on your mind and what we can straighten out. But in the portfolio manager, in the virtual portfolio manager section, the thing that we can do here is actually, it's real simple. We have a wizard we built, and all you have to do is hit the create modify button. And I'm going to give this test 2. So I'm setting it up, and what you'll see on the right-hand side of the screen is you'll see all of the wizard questions that are going to be asked of you so that you can fill these things out and actually set them up so you'll be able to see everything that you set up, and I'll talk about some things. Now, once again, when we built this platform, it was a long-only platform, so I'm just going to accept this name by hitting next, go to test 2. We're going to just leave it. We automatically set this to a 5-year back test. And I would suggest not to change this because it says here that you don't want to go less than 30 days. We've seen folks try to set a new portfolio and start it today. It's not going to work today because, as I mentioned earlier, today hasn't happened yet as far as we're concerned because the data is not in there. You could do one as of yesterday, but there's no point. What you want to see is the constituent list that you put in there. You want to be able to see how they performed over time. And a 5-year look back gives you plenty of activity, plenty of modeling, so you can start to see what type of performance and situations they have. So we'll go ahead and we're just going to accept this 2015 date. There's some other things on here, and I was looking at this wizard. I updated some of the language inside of the wizard on the weekend. I was looking at this, trying to make it more sense for retail, not just everything in here was built originally for investment advisors, but this is still adequate. And one of the things that you need to understand about building this model is that you have to have enough capital in the model to be able to trade the stocks. And if you start putting in stocks like Berkshire and stocks that are, gazillion dollars per share, they're not, I mean, let's face it, Berkshire is a mutual fund, really. It's this giant thing. It's not really, you don't really want to trade that. We've seen people try it for the last 20 years. There's not a point to it. What you want to do is actually just make sure if you do have high price stocks in there, then just set it for $1 million, because I'm going to show you in a minute the dollar amount isn't important at all because everything's going to be delivered in percentages. And this is why I mentioned earlier on that you want to have a portfolio setting. So you want to have some dollar amount set to the side that you're going to run, and even consider doing what is opening up a secondary account with your broker dealer just to have this thing all compartmentalized so that you can actually run the balances. Because one of the things when we get into matching orders, matching the percentages, all those type of things, you're going to need to understand that how to match all these things. And we are working with 2 potential vendors right now where we're going to be able to automate our orders very simply out of this, at least have a process. And once I get a handle on some of the, we have dealt with just the institutional side of the market for 20 some odd years. So what we're looking at is getting into what it takes to enter orders on some of the other platforms, on Schwab Retail and Fidelity and TD and some of the other places out there. I don't think Robinhood has a very good entry system. I think they're not set up for doing batch orders, but I could be wrong. I actually have a Robinhood account. I've never used it. They just suck on my money. I have a small amount of money in there. But the other thing that I'm going to tie together with everything that we're talking about today is actually is that, hang on one second here. Sorry, we have a bunch of latecomers coming in. But what we're going to do, everything that we're going to do is showing the matching, how to actually model a basket of stocks. So theoretically, what you're going to be doing here is actually building your own private mutual fund. We talk about that a lot. If you go to the Portfolio Expert website, we talk about private funds. We talk about dynamic direct indexing. That's something we're going to be getting into on the channel and things that I'm going to be presenting to the public. I want to empower the actual public to do things that only institutions have been able to do for a long time. And, you know, it's going to be very empowering to a lot of you. It's not going to be for everybody, but if it's for you, you're going to really be able to empower your investments. But this section right here, how many stocks, having enough capital, making sure you have that. If you set it to $1 million, it's okay. We'll go forward. We're going to leave this at 100,000 for right now. I'm just going through a lot of detail on this so that you understand it, hoping that we will be able to, I guess my goal here is to answer as many questions in this tutorial I'm doing right now that I think you might have, because we've been doing this for 20 years. We've heard just about everything. And Jay and I were talking earlier. Jay's been working with me since 1992, and we were flashing back to some of the questions and things we're getting. We were flashing back to 1992, remembering back in the old days, so to speak. And so we've been through this. This is not our first rodeo. We've actually that was the last time we dealt with retail, 92 through about 95, I think it was, 96. And then we went institutional, 96 to 98 is when we switched over. But so all of this stuff is really important. This section right here, I'm just going to tell you for the moment, just to use the default value. This is what we talk about is the minimum transaction amount. It says $1,000. I will throw this out here, and I need to update this. I just realized that I need to update this verbiage that's on this page. And you can use whatever I'm going to go back one page here. If we go back to the 100,000, that is, so the 100,000 is the amount of money we put in. We go forward, 1,000 is at 1% of that number. So if you put $1 million in there, it probably should be 10,000. It just affects us. Jay has figured out how to make the machine work even better, to put extra grease in it and get a little more output. And in some advanced presentations, we'll talk about how to actually do that and why and when you might want to do certain things. So we're just going to accept this 1,000. Now this page here was all of the verbiage on here. Everything was aimed at the amount of risk that you want to take. And we have found that if you're going to trade individual symbols, now that most brokerage firms out there have 0 ticket charges, so it costs nothing to do a trade. And then soon, just about everybody will have fractional shares. And when that's out there, we're going to really show you how to do some really dynamic strategies and how to export the orders, put them into an order entry module at your brokerage firm, and do a batch order and do incremental shares, all kinds of stuff. That is what the dynamic indexing is all about. And we'll talk about that when it's appropriate. But this page here, I'm going to tell you just to set it at high activity, low liquidity. And what that is saying is this model that we're about to run is what we call a demand on capital model. Now, many folks out in the investment world, especially on the institutional side, talk about MPT, modern portfolio theory, or allocation theory, and they're allocating to different asset classes. Well, this actually does something very different, which I'll show you as I go through this presentation. This is actually going to calculate how to use the cash on the level you tell it. So if you tell it high activity, low liquidity, it's going to target basically a 98% investment amount. It's going to leave a little bit of a slush fund. It's built into the model, so it's never going to go 100%. It's going to go 98 and change. You might see a 99. But for the most part, you're going to be at those levels, and we'll just kind of I'll just show you as we go through. But you want to use this high activity, low liquidity. You want to use the cash aggressively. And all these other things we're here about different suitability classes and things that advisors worry about. You folks are not to worry about that. So we're going to hit next, and you'll see over on the right here as I'm going through this wizard, all these values that we're putting in are starting to fill in. Now, it says right here, this function is for advisors only. We're going to go next. This is for fees. Now we get to put in some symbols. And tell you what I would like to do here. This might be kind of fun to do. I don't really care what they are, but since we have the ability to, I would like the folks on Zoom, don't mean to leave you YouTube folks out, but maybe just a call out, give me a couple stocks, maybe we'll get 10 stocks. So just give me some symbols and we'll just see what happens here. I'm just going to open this up and just see what we can build. So you can unmute yourself, or I don't know if there's a chat room, Jay, if you want to maybe pull out a chat, maybe that's a better way to do it, and Jay can do it. You know what? I had turned my sound off, Jay. I couldn't even hear you. So, well, I had my sound off. I wasn't muted. Okay. Just go ahead and run them down, and I'm going to write them down. Okay. 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 Yeah, I'm seeing some stuff on the chat on YouTube as well here. So I'm going to grab some of these. Let's go with, yeah. So we got to put Apple in there, right? We'll put INTC. So this is going to be enough, okay? So thanks, folks, for doing that. Well, listen, if you're using this tool, you can put anything you want. You can have as much fun. I call this the sandbox. And I mentioned this before. If you folks are doing this and you're using this tool, if you're just testing things out, when you're done, just delete them, because we have to run them even if you're not using it. If you want to watch them, that's okay. But, clean them up if you just got a bunch of junk in there, if you don't mind. And, we don't want, if it starts to get cluttered up, then we actually have the power, don't we, Jay? We can... Yeah, so we wouldn't want to, and it'd be a lot of hassle, because we want to make sure you guys have in there what you want. So let's just put these symbols in. Now there's a couple things we're going to do. I'm gonna build a mix. I'm gonna randomly. There's no thought behind this. That's why I wanted to do this. I'm not expecting anything great here from the standpoint of what we're going to get out of the performance, but I just want to put these symbols in. So what the plan is here, folks, I had something different. All of a sudden, I realized this would be a lot more fun just to throw some random stuff in here, and then we can evaluate it, because that's even going to be better. So let's take a look at. So we're going to put NVDA. Okay, wait up. I got to back up. So when we look at this box here, we're looking at a couple things. These boxes on this page, there's several, and you need to understand. Optimize for weekly modeling. The next one down is daily modeling. So it's optimizing for daily modeling. And down at the bottom, it's weekly daily modeling. And so we're going to play with this thing. I'm going to start going through this fairly quick as far as is just starting to build this, but explaining what I'm doing all the way through. Last week we kind of did random. I felt like it was all over the place. So I'm really trying to focus on step by step. But these boxes, the top boxes of each one of these sections, weekly modeling, if we put symbols in this very top box, what that's going to do is make sure that it has the best model. So we have two models, 1.2 and 3.2. 1.2 is a more aggressive model. It seeks out the V bottoms. It's just going to be in and out about 40% more than 3.2. 3.2 is very patient. It also can handle a lot of noise when the markets get real noisy. It can handle it. Sometimes it handles too much noise. But for the most part, it does a really good job at trying to get through these managed stocks. And this is the other thing I want to point out here, is this is different than picking and going, I have to win on one stock. If you're trading only Tesla, let's say, you got to be right. You're right or wrong all the time. It's brutal. That's a tough world to live in. And I grew up in trading pits where you only traded one thing. You had blinders on. And it's a brutal environment to be trading just one stock, one whatever. And, so what we're going to be doing now is we're going to be trading a basket of stocks, and we're going to be mixing buy and sells. We're going to be allocating to different amounts to different symbols, and there's reallocation orders. There's some really cool stuff here. So I want to really start to integrate what this thing can do. So, all right, I babbled on enough, but I think this is important to understand. So I'm just going to actually put in some symbols. I'm going to put some in this top. I'm putting NVIDIA. Let's do optimized daily. Let's put Tesla daily. I don't know some of these stocks, NOW. So we're going to mix, and we're going to do, some of these are going to be trading on a short-term basis, on a daily. Some will be trading on, I'll fix it. I say I got it wrong. No, I screwed it up. Thanks. Yeah, exactly. Okay, so let's see here. Let's put Apple down here. I'll fix NVIDIA since I fat-fingered that one. Okay, so now I have it right. And let's see, we got a couple more here. Let's put Softy in, Microsoft up here. And now one of the other things you can do here, just why I'm showing you this, is you can actually, let's say for instance, you've been in research and you just like how 1-2 trades better than 3-2 on a particular symbol, and you've done that homework and you've been through research, and we're going to go through some of these ideas here in a minute. But what you're going to end up, you can just put it down in this box, and we'll just do this one. I have no idea if it's the right one or not. Like I said, this is could be a cluster of a portfolio, but I'm going to put NWBO down here. I'm just going to force it to do what I want it to do. So you have control over the constituents, where it's going, all of that stuff. So let's see here. This is enough for right now. I'm just going to go forward. So once I do this, the next step, once I have those in there, I click on it. Now you're going to see Apple's got a daily 1-2, and you'll see these green buttons over here on the right. If you ever come in here and you see a red button, or you see this last date is in red, that means there's missing data. So if you know it's that's a good symbol and it's missing data, you can go up here to feedback and you can tell us you can do a bug report and tell us there's missing data. Doesn't happen very often, but it can happen. Sometimes the stock's been stopped traded or something. But anyway, so we have all this list here. They're all green, some in daily, some in weekly, and all of this is there. Now, one of the things that's on here, and I'm going to show you this right now. Actually, I don't want to do it yet. We'll do it when we go back. But you can actually go and create a snapshot. So you can save all of your settings. So you can actually you can name the snapshot different names. You could change the constituent list and you can flop back and forth. That's getting way out of there. So, but I'll show you that at a later stage. But when we go next now, these are all settings for fees. This is once again for advisors only. You can leave it at monthly. You don't have to mess with this. And you go to next. The fee is going to be 0 automatically, so don't worry about that. You don't want fees coming out of your model. This, like I said, was based on for advisors. So I'm going to show you something. When I click next here, it's already calculated. I told you this was a demand on capital model. And what that means is it looked at the symbols that we put in and it said, what's the average amount long? We told it to be aggressive or use a high activity, low liquidity. So we told it to target we told it to target the full use of the capital. So it figured out of the 7 symbols we put in here that we're going to make our initial bet. This is called the initial allocation factor, the IAF, which is initial allocation factor. That's where it's going to start its bets. I'm going to explain this in a minute. So when we go next, now it says you're finished, and what you do here is you review everything, you make sure your settings are right, and we're going to click on allocate finish, and there's a box that pops up at the top. You have to click on that. And so now what you'll see here is test 2 shows that it's in the allocation queue, okay? And that will stay like that for the rest of your life if you don't hit refresh. You're going to have to hit refresh. So if I hit up here, portfolio access, it will update, and here it shows that we've run this through yesterday's date, 7/6. If you remember, this is the end of day. We haven't got July 7th data in the system until 8:30 tonight when it updates. And so when it updates, if you have daily symbols like we have in here, if there's any trades, you're going to find out about those trades after 8:30 tonight Eastern time. So those of us on the West Coast, it's early. It's 5 o'clock. Okay, so we've run the portfolio, and year to date it's up 17.21. So we can click on test, and there's all types of things now that have been generated for this. I'm going to make this just a touch bigger. So you can see that our current, now this is something to understand too, as current was as of last night's close, so we're up 3.6% for this week. Last period was up 5.2%, and year to date we're up 17.1%. And you see there's quite a bit of volatility in this thing. We saw the collapse in the beginning of the year, and it's rebounding back up. But as we go down, we're going to see, I've got to bring this back in a little bit. As we go down, we see of the 7 symbols we put in, currently 6 of them are long. So we've got 88.95% of our money's being used. We've got 11% in cash. And then it shows us that our original 100,000 we put in has grown to 384,447. And you can see below, you guys did a good job picking stocks. Good job. 18% in 2015, 43%, and you can see the numbers down here, 60% in 2019, up 17 this year. So this is the back test. This list down at the bottom is month-to-month returns. This is what I told you about in the PowerPoint. You have month-to-month, you'll have the annual returns. And please understand that you can't add these numbers up at the bottom and get the total return, because this 18% was on the capital. Everything's based on walking forward. And I'm going to show you there's a lot of reports in here. So if you're into the math is all here. This software has been actually audited 3 times by major broker dealers. And so the accuracy is there. We didn't do any fees, so that's good. We get to keep all the money. There's no ticket charges. Hopefully you have a good broker that is actually not charging you any tickets. If you don't, you need to fire them, get a new one. I don't know if there's anyone out there even charging ticket fees anymore. Okay, so that's your first report. That's your snapshot. Now we can go in and we can look at open positions. Over on the left here, you'll see it'll show all the open positions. So we can see Apple right now, we're up 47% on that trade. It'll also show us where we bought this trade, what the allocation to the portfolio is, everything. So if we did want, if we wanted to match it, we'll go into matching in a minute. Let's just stick with the returns. So here's all the symbols. These are the current positions we have. The only one that's not working is Northwest Biotherapeutics is underwater by 5%. We bought that on 526. It's a little penny stock, so it's 37 stock, so 37 cents. So that's probably not the best stock. I don't know these stocks, like I said. Tesla, we've got a 70. We got a 76% return on Tesla. Bought that on 5/6 on May 6th. It went long. It's 20% of the portfolio. As you would expect, it's been the one that's growing the most. So we had 20% of the portfolio. The entry date was 5/6. The entry price was 776. Current price 1371. This was as of last night. And so this is our profit. So this is what we look like. If there's no orders, if we had orders, they would show up here. And you'll also see orders on your homepage when you come in for any type of orders that are coming in. Okay? So let's see, what else can I show you? Yeah, active stocks. This is actually an important page. What will happen here, if there was a stock that did not have any values or the data was out of date, so there was no data for 7/6, which is the last known date, this would actually paint in red, so you would know there's something going on with that data. In this case, everything's it's all in regular text and it's ready to go. So there's other reports we can look at. So we can look at the trade profile. Trade profile is going to show we got a lot of technology here, a lot. So it's going to show us different elements here. You're going to see also some attributes of these stocks down here. Apple right now is an underperform, and the reason why it's underperformed, it's exceeded its holding periods. That's a conversation that we can have at another period. Microsoft is still an accumulate. We've got ServiceNow is a hold, and all these other an accumulate. So I'm just going to make some notes to myself. We're going to take Apple, since it's an underperform, and we're going to use NOW, and I'm going to show you how to update your constituent list next. So I'm just going to continue through this presentation as we're doing it right now, and there's two things I have to do. We'll open up for questions. We're into this thing almost an hour, but understanding all these steps are going to make it really simple for you to manage a constituent list or manage a basket of stocks, creating your own personal mutual fund. Now you can put, I'll think a lot of stocks. I think you can put up to like 1,000 stocks, right, Jay? It's a lot. Yeah, so you're probably not going to need 1,000 stocks. I'm going to tell you that somewhere between 25 and 50, and 50 is only going to work if you have a lot of money, or you have fractional share capabilities, and that's for another time. I don't think Thinkorswim or TD, they don't have it. Schwab says they're coming up with it. They do have fractional shares at Robinhood, and I think Interactive Brokers, the only one that I know right now that actually has active fractional shares. So as you go through all of this information, this is just going to continue to break down, telling you about your constituent list. We're going to look at a couple more things here. We can go to performance, and we can click on here, and it's going to show you, I mentioned the rolling returns. I'll bring that up here. So we have a 12-month rolling return and a 24-month rolling return. And I set these particular screens up for one reason. I used to run a commodity management firm back in the day, and we always would talk to folks about two things. You want to look at your rolling returns on this increment, 12 and 24 months. And the reason why you want to look at it on that level is once you want to get an idea what to expect, what the average returns are. So the average on this particular portfolio we built is amazing. It's 27%. If we go to the 2-year, it's 60%. So we picked a lot of tech stocks that have been in play for the last couple of years. Will that continue? It's hard. That may not be the case, but I'm going to show you how we're going to dynamically update our list all the time, because you want to refresh your list. You don't want to look at it like a sports team, right? When you've got your players in, you want to replace the players when these guys get tired. And I'm kind of picking on Apple and this now for two reasons. I'll go back to that in a minute. But what we're looking at here is just the idea of rolling returns. So in the case of, at the top here, the 1-year look back, the 2016 look back, if you recall, the inception date on this portfolio was 2015. And so the look back here, that's January 16. So the 1-year return from January 15 to January 16 was a negative 1.3. If you go to January 16 to January 17, then it was 71%. You can see these different rolling returns will give you the worst and the best, and then the average and a standard dev. So you start to get an idea of what you're able to expect from this. And once I'm just going to tell you, folks, you use this, and this is what I've been telling advisors for years. It takes, once you get in there and you start to update your constituent list, we're going to do some more training on updating constituents lists, screening, all kinds of things that I want to teach everybody. Is what you want to do is, it takes, if you're only updating every 3 months, it's going to take 2 years, 4, 8 updates, and then you can really start to get a handle on this thing. This product was meant for managing money over a 5 and 10 year period and longer. So this is a much different concept than just day trading. And I saw on the timeline come across a while ago, and this is fine to use a product like this in the research, but some of the exits that we've got has set up some pretty good short sell opportunities. And we're not going to focus on any of that today, but there's so much that you can do with this particular tool. But I want to focus on managing money, because this is something I can tell you for over 20 years, I spent my time with investment advisors. My goal was always to be able to help the public, and I thought I would do it through investment advisors that had hundreds of clients, and they would go out and apply this process and do wonderful things, and many have done just that. But most of them are incapable of being disciplined. In fact, the bulk of them couldn't even spell the word discipline, much less be disciplined. And I always remind everybody that the word discipline is interesting, because it used to be in Webster's. I went on the internet the other day, and it's not this anymore, but to be disciplined, you have to have a set of rules or a state of order to bring about a desired result. And if you have no rules and no state of order, you can't be disciplined. So any of you that are trading and you don't have some really hard-coded things that you do in every trade, it takes a while to develop that. That is what you have to do. I was talking to somebody earlier. You have to realize when I started this stuff, I had an Apple II, 1980. There weren't any computers or none of this stuff. I had to learn how to trade the old-fashioned way. I didn't know. I had to risk capital, do all the things you have to do. This stuff, it's important. I don't care how you're doing it, whether you're using this tool, you're listening to a channel, and you're doing your own thing. The process is always the same. You have to have that state of order. So everything built in this process, is it perfect? Absolutely not. But when you start to mix it with 10, 15, 20 instruments, symbols, and you've got a rotation going and allocations, and we haven't even got, there's so much I can go into today. I already realized that there's no way I'm going to hit on everything that's in my head right now, because we have an allocation system that does rebalancing, and 65% of all the profits we're going to generate in this portfolio manager is actually going to come from that rebalancing technology that we built. We spent the better part of a year, and we spent, I guess, if you look back at what we spent millions of dollars in developing this process. Going all the way back to 1998, I raised capital for the company. I've done all kinds of things. We've had customers paying us for many years. We've developed other products, and the process just has unfolded over this experience that I'm bringing to you folks. When it's not a joke when I say I'm bringing my 40 years of experience. My 40 years of experience live inside of this. And so when we're looking at rolling returns, we're looking at this type of process. It's a much different type of approach to the markets than you're going to. I have to tell you, when I started in 1998, and technically 1996 is when I came up with the idea of this virtual portfolio manager. I've been waiting around for all these years for someone to come up with something like this. And as far as I know, there's nothing out there like this. And the dynamics that this thing creates is pretty amazing. But I'm giving you a lot of a backdrop on this stuff. So let's get back into the primary presentation here. But there's another thing I want to show you. I'm going to show you, and this is awesome. This is exactly what I was just talking about. This is the model. What I just brought up, I clicked on the left here in the portfolio reports. I clicked on the trade log. So this shows every transaction that was done to manage this portfolio to generate all of those returns you were looking at a minute ago. And these are all the buys and sells and these reallocation orders here. And it's interesting because just, the last time we did any reallocation was on 5/26, and we actually sold a portion of our Apple, AMD, Microsoft Now, NVIDIA, and Tesla. So we actually took partial profits on those symbols, and with that we bought NBO, and this was all because we used all the cash. This MBO trade right here, we put out of this model, we threw $53,247 into that stock. But what we did is we raised the capital from this block of cells right here to allocate to those trades. And what this does, this is what I was talking about. When these reallocation cells cause partial profit taking, so we're selling out. We could look at, I don't have the actual prices here. This is the portfolio manager, but we could look at the actual prices that were sold here. But the bottom line is we had another buy here on Microsoft on 5/11, but look what happened here. There's another block that sells, and the same constituents got sold again. We sold Apple, AMD, Now, NVIDIA, and Tesla. So we're selling those chunks. We're taking money. This is this is a gaming theory, folks. This is not an allocation theory. It's not your typical stuff you see. When we developed this process, we were trying to come up with a way to reallocate profits from trades. What happens when we get that buy signal on 511 for Microsoft, we didn't have enough cash to buy Microsoft. We had 100%. If you recall, when we set this portfolio up, we had it set to be 100%. We wanted to use 100% of the money. We wanted to be as aggressive as we could. And so when we didn't have any money to buy Microsoft, but we had a new idea. So the problem that we solved was, well, how do we raise capital when we have more ideas than we have money? And this is how we did it. So we took Microsoft, we figured out what we call a linear allocation. I'm not going to go into the allocation model, but we decided this is how much of Microsoft we're going to buy, and then we're going to downsize or reshape the portfolio from the pie chart. We're going to reallocate and rebalance the portfolio anytime that happens. And you'll see these happen throughout the sequence here. Okay, so let's see if there's anything else here I want to show you. Yeah, we can go here. We can go to yearly returns. I showed you that already, but the idea is here that you've got, it shows you what the annual returns were year to date. It shows interest. Believe it or not, we actually calculate interest, which is zero anymore because we use a short-term instrument on this. So we're really not getting any interest here. And it shows the capital gains that you're getting year to year, which are pretty much the same as the year to year return. But the other thing that's here, there is a symbol return, which shows us how many trades we've done on every one of these symbols. Look at Apple here. We did 30 trades. We had 16 winners, 14 losers. Our ER ratio just for this sequence was 101. That's, if you haven't watched some of the other videos and talking about understanding just the research tool and what this means, but you can see exactly what the trades were, 50%, 70%, and NBO, I think that was the 35-cent stock or something. I'm not sure. Maybe that was now. Was it? Yeah. Yeah. So, it did 33% profitable. It gave an ER of 79. So that wasn't a very good stock. And one of the things I wanted to do, which I was unable to get done today because I want to open up the questions here in a minute, is I was unable to actually show you how to research. I do want to do one more thing because as Jay would tell you, I'm a little bit into mad scientist mode here. And I want to go in and I want to change some symbols real quick. I just want everybody to say, no. I might. I'm being a smartass. If you don't know by now. Anyway. So here we go. So what I want to show you is I want to go into one of the things you can do in this is you can skip around once you get to the wizard. So I'm going to go to the create custom portfolio, and I've still got a list of some symbols here, I think. Yeah, I didn't have Intel. So I'm going to actually put Intel in. We're going to go on a daily on Intel. And so I'm going to go ahead and hit next. I'm putting it down in the box. I'm optimizing daily. So I'm going to hit it. And what you're going to see now when I go next, you're going to see Intel daily 3.2, and it's got a green button. So I'm going to do something that will absolutely confuse you, and I will tell you that just about everybody screws this up. Jay would confirm this. So yeah, we all have. So it's a little tricky. We actually made it on a Portfolio Expert. It's a lot easier to do what I'm about to do there. There's an extra step. So I'm going to take Apple out. We're going to take Apple out as of yesterday. We're just going to liquidate Apple, and I'm going to replace it with Intel. I'm not saying that's what I would do. It's random. Okay, so don't go, Kendall sold Apple and bought Intel. Don't do that. That's not what I'm doing. So I want to show you how to do that. So on Apple, I'm going to click on this box up here, and you'll see this box pop up, and it shows the current history. It's going to show the current history for Apple, and it's going to show January 2, 2015. That was the inception of this portfolio. So what was yesterday's date? The 6th. So I'm going to go over here to a new entry. I'm going to drop it down to July 6th of 2020. And what I'm going to do here on this line here, I'm going to go stop, and I'm going to apply it. And now what you see at the top is you see two entries, January 2, 2015 start, July 6, 2020 stop. And what that does, I just told it, don't trade Apple anymore. Stop trading it as of yesterday. Also, I told it, if Apple has a position, then sell it out. Liquidate it, don't want it anymore, don't want to trade it. So I'm going to hit close window, but you'll see something else. Actually, before I close the window, I'm going to pull this down. If you now look at Apple, it has a red button on it. That means it's been deactivated, no longer active in the process. If I wanted to right now, maybe I wanted to start trading. I'm just going to go, I am in mad scientist mode. So I'm going to go to July, and I'm going to say on July 9th, is that this week? Yeah, let's go July 8th. I'm going to tell it to start it again, and I'm going to apply it. Now I'm going to show. So now what's happened? Yeah, look at I messed up the whole logic. That was awesome. Yeah, I know. So I got to put 2020 here, and everything will come back in line. So nice demo. Okay, so now you see I started in 2015. I stopped it on July 6th, and then I want to start trading again on July 8th. So if Apple's still long, it's going to sell it out on Monday and buy it back on the 8th. So I can control, and it's always going to buy or sell on the opening price. And the reason for that is the opening price is the only recreatable field there is. If you go in after the market opens, then there's volatility, and in our case, you have to understand that there have been billions of dollars running here. So if we were telling people to buy and sell all kind of random points in a day, who knows what kind of volatility we would create. We've created enough volatility doing things on the open. Trust me. We actually have, I think it was 2010 or 11, we absolutely blew up some stock one morning. And the good news was when we sold it, it kept going down, but we blew that stock up. I don't know how much. We had a lot of people on this. We had a lot of advisors on that particular stock. The good news, we sold it. It was a good sell, even though it opened sharply lower, and I think a lot of it had to do with the massive selling that we had in there. So anyway, so we can go here, and we're going to close this. So we made a couple of things. On Intel, this is where it gets a little trickier, because Intel, we wanted to start trading on Monday. So right now, you see it automatically comes in. It's set to start on 2015 on the inception date. Well, I'm going to click this to stop. On 2015, I want to turn it off. And then I'm going to do a new entry on July 6th. I know this is complicated. It's in the video. I did this in the video that's on the website under the WaveTech support. So there's a new video up there. But I'm going to go to 2020 here, and I'm going to start it. So when I apply this, it started trading that symbol yesterday. So what I've done is so let's just review what I did. I took Apple out on Monday. 2 days later, tomorrow I'm gonna buy it back in the morning. if we were to run this portfolio when it runs tonight, we're actually going to have a buy order on Apple in the morning. And Intel, I don't know if it's buy or sell. We'll see that in a minute. The other thing I can do here is I can put a snapshot in here, and I'm just going to call this test 2, and I'm going to put the date in here. I'm just going to put 7. So I'm going to put the date in here, and I hit save. And what I did was I just saved a snapshot. You can see here when I click on it, I saved all my settings. So I could have saved it first, and I could have reverted anyway. I could revert it back. So all we're going to do now is we don't want to change this allocation factor. We just want to go to the very last step, allocate finish. I click on this, and you have to click this OK button, and now you'll see it's back in allocation queue. 17.2 was the returns. We'll see what happens. We should be able to see if Intel's long and all that kind of stuff. You have to click the portfolio access to refresh this page. Now it's actually run, so it's updated already. Typically, your portfolios will update anywhere from, it takes a nanosecond to run this. We're on the server set that this is on, it'll run these things. But we look every minute, so if there's a bunch of you building things, it's going to run batches of portfolios. We can run quite a few at the same. So maximum probably wait would be 2 minutes, if that. I've never seen it that much, but we do have a lot of new users in here using this thing. Yeah, so Jay, I see a comment that you put in. I just saw it. On YouTube is that, actually with fractional shares, none of that matters anymore. You don't have to use smaller stocks. You don't have to move any of that stuff. If you have a broker-dealer that has a fractional share, the price no longer matters. Your dollars no longer matter, everything. So hopefully all this stuff's going to come around. Schwab, I think, says they're bringing it out in Q3 or Q4 is what I heard. So anyway, but now let's look at test again. And the first thing we want to do is we're going to go to our open positions. And let's just take a look. Okay, perfect. So if you recall, when we looked at this the first time, Apple was long, had a big gain. Well, we put Intel, and you're going to see here, just like I told the software to do, on 7/6, it purchased. Yesterday, it purchased at $58.72. It closed at $59.54. And so it shows a net profit of 0.82 or 1.3%. So we bought the open of Intel yesterday, and Apple's gone. I'm going to show you that as well. So you can see all the constituent lists. If we go to the trade log now, you're going to see Apple sold out right here. We sold $54,000 of Apple. And regardless, if you match in the matching, you match the percentages, all your portfolios will work, whether you're running 10, 20,000. The key will be, and Jay is right, if you don't have fractional shares, then you're going to have to make sure that the monies you have, you can split them down to enough that works. And I see somebody, would it operate on Tastyworks? I don't know. But by the way, Tom Snozdoff was the very first guy to use this software, by the way. Anyway, but you can see Apple is sold here, and then we see the buy. Everything we told it to do happened just as I just showed you. So let's open up for questions. I'm sorry to just go on, but there was a lot to cover here today, and hopefully I've fixed a lot of questions that were out there in the field. So let's go ahead and open up for questions. Hey, bro. Yeah. Right. the only place you can get that is actually to look at the trade log and see the activity there. So there's no specific report on that. So you could go back and see what was being held. I'm trying to think if there's a report that shows because it shows you the current positions, but you can't go back other than to see what was bought and sold here from that viewpoint. I don't think I. Yeah, well, I think the only way to do that is to. So let's go ahead and let's go to the active stock list, and I guess you can click on research and see if there was any activity in that symbol that may have, like here I brought up AMD, and it was long. It's out right now, so you can, if I think AMD maybe was on a daily. I'm not sure, but you can look at you could actually look at the individual symbols. About the only way you're going to be able to tell. But trust me, Rom, if you're trading this thing, you're going to know which one did it. I understand you want to go back in history. Yeah. Right. Yeah, I'm just bringing it up here. Yeah, so if you can see the bad months, yeah, there's no way to go back and figure out who the bad guys were other than looking at the trade flow or the trade log. That would be it, and that I'm not even sure is going to show you exactly what's going on there. We have another report which I'm not sure. Unfortunately, we don't have the ability to generate it on stuff at our old website at VPM Partners. We had a interactive Tableau environment that you could see some of the more you could see more detail in, and that's something. So just remember, this tool is I guess the first iteration of the process, and even in Portfolio Expert, I don't think we can actually break it down to that level to see, what was rolling over, what was causing that negative return. Although on this symbol returns page, one of the things you can see, like here, you can see, because I just brought Intel in, you can see that it's got no trade. This is only while this symbol was active. So right now we got one trade that we've done at this time. So there's no way to get that information actually that I'm aware of. And I totally understand why you'd want to see it, but yeah, no. No, there's not. So you only know what the current values are, and we used to actually have that report in a previous version, and we don't have it, and that's something that I want to add back in actually. The No, it's all there. Trust me. It's just a matter of building a report for it. Yeah, there's a lot of data here. We just the original version of this was built in 2000. The last time this was updated was 2002. Other than I put some lipstick on the thing and put some new icons in. That's all I did. But this actual platform, it runs on CGI and Perl script. It's like old technology. I mean, this stuff you wouldn't even build something like this today. And the plan is actually to ultimately rebuild an entire platform, and having some reports like you're talking, being able to generate that stuff is absolutely on the list. No, Mm-hmm. Um, yeah. Um, there. Yeah. It's actually there, but it's not being put in percentages because right here you'll see uh, gross loss, gross profits, and net. So it is showing you the numbers, but it's not putting it in percentages. Yeah, yeah, that's pretty much it. So I'm trying to think up. Let me think about that on what how that would be calculated off those numbers. So that you know, but it's all right there, but it's not being expressed in percentages, which would be really handy actually. Right. And I have to look at Portfolio Expert and see if there's anything like that. I made a note to myself to take a look at that. Yeah. Yep. Yeah, and that was one of the things I didn't get through in my presentation was the matching. So right here, I'll just bring up this portfolio. So let's say we did everything you just said. We built the portfolio. We've we're, we want to go forward. This is it, right? All we have to do is match these percent portfolio right here. So we would take, this is why I was suggesting that you have a separate portfolio that you can segregate the cash out of. So you know exactly, let's just say we put $100,000 in a separate portfolio. And so we're going to take 16,000 is 16.01 and we're going to put that in that's going to be the allocation for Intel, and then 14% on Microsoft. And what we can see what this is going to look like on the summary page, you're going to see that you're going to end up with 9.48% cash. Now we have a tool which I will have to dig out. I'm going to have to, Jay, remind me to reach out to Mitch on that. But we have a tool that you can actually put the value of your account. It will build the orders for you. It'll actually round up, round down. It can do all kinds of stuff. Haven't used it. It's a clunky old Excel tool, but if you're doing it, it's pretty handy. For the most part, a lot of the broker dealers have the ability which to be able to put these numbers in, and I think I said this last week when we were talking, is that you can actually put in the percentages. Like if you had your portfolio up and you had that money in there, you could say I want to buy 16.01% of that right into your. I know Fidelity has the ability to do percentages or dollar amount, and because I have a Fidelity account, so you can do it that way, and then it would authenticate. But all you have to do, going back to that open position, is you match these values by percent. Yeah, so but that is more in depth. But what I would do before I did this, so if we were reviewing this portfolio to walk forward, so that's a really, really good, look at this thing, is that we want to review all these symbols. Okay, so let's just bring in Tesla. Do we want to buy Tesla at 1371? Probably not, right? So what you want to do, and there's so much we're going to have another session on this for sure. There were a lot of things I want to get through. I know I got long-winded on some stuff, but I think all this stuff is important when I'm trying to teach you folks how to be money managers and to be able to look at this process. But this is one of the things that we would do is I don't think I want to buy this stock at 1,400, right? So we're probably going to have to find, when we're building the portfolio, there's two ways to look at it. We just randomly put these symbols. So what I need to do next time, and I didn't get into all this stuff because I didn't realize how long it was going to take to get to where we are right now, is we need to go through, maybe look at a screener, we put them into a watch list, we start evaluating symbol by symbol, and we want to build a portfolio to walk forward. We want to buy low, sell high, right? So we would want to buy positions. I made this comment on Sunday's video, is that you want to, like here was a midpoint buy. It looks like maybe you missed it. Well, there was plenty to buy here yet. Yeah, so no, well, I think high beta are good. And here's what you do is, we didn't get into that. So we're going to have to probably, in future meetings, and I will try to put some videos out. I can tell you the video I put out that's on, if we go over to Portfolio Expert real quick here, the video that I put out is really, it's underneath the support the WaveTech Training videos. And you're going to see Building WaveTech Portfolios 101. That's about 35 minutes. So I will be putting some other videos out as we go forward. One will be just what you're asking. So if you went to a stock screener and said, I want a beta of 2.0 or greater, or you can put it in, let's say it was like a screen from like something like Portfolio 123 or something like that, right? You could say, hey, I want betas between 1 and 2. And then you could take that list of stocks that come out of the screener, dump it into a watch list, evaluate which ones have good ER ratios, so which ones trade well in the system, which ones have, good returns, and then you also ultimately want to look at where they are. I'm gonna go to this page right here real quick. I want to show you something. So it comes to this. So let's say you bring up a stock and it's 150 days into the trade, or if it's a shorter term trade, this scale train goes from 0 to about 50 days on this scale here. But if you're looking at a symbol and we talk about if it's more than about 50 days or about 30% of the holding period, you probably want to find another idea. So you want to make sure it's timely. You want to make sure it's timely, and then you also want to make sure that it has good returns. So you go into the research area and you're going to look at the ERs, you're going to look at the performance of the symbol, and you're going to hone these down. So when you're getting into portfolio construction is really looking at these things from that level. So obviously Tesla's got a great track record, but we missed the trade if we just looked at it today, right? So you want to be able to find those type of things. That makes sense? Yeah, sorry about this. I got stuff popping on the screen. TradeStation took over. Yeah. Right. Right. Yep. And extremes. Yep. Yep. It, it's not in WaveTech. It's in TradeStation, and that's going to be if you're using TradeStation, you'll be able to get that. I'm working on getting that in the App Store, so I'm putting that out on the channel every day. But that is all proprietary stuff that I've developed. But it is available. I put it out free on the channel. I put out the futures every evening, and then I also put it out on the SPX numbers I put on the channel. And if you follow me on Twitter at Twitter/portfolio expert, no E in expert, and I put out the futures every night there. It does, yeah, but those are different. They're not the same. Yeah. Yeah. Yeah, those are based on the model that's being used, and some of those are moving average values that are in there. So they're not the WaveTech Fibonacci grid that I put out with the everyday. Yeah, I put it out every day. Let me. Let, just right now, it's manually done. So you know, uh, it's unfortunate, I'm working on getting it out so that it will work on any symbol. It would be on any stock. Was it? Yeah. I've never even looked at those. I don't know. I've never used that. I don't know if it sounds like there might be discounts and premiums in there. So, yeah, so listen, I've never even looked at the symbol. I don't even know what it is. So, unfortunately, if there are discounts, and especially if it's market-driven discounts, and that's going to throw some noise in using those numbers. Yeah, I've got my hands full right now. I'll be honest with you. I used to, my old email box info at Kendall Report is absolutely blown up. I just look at that and I just start laughing. I scroll through it and there's no way. And Jay and Mason have been working on answering questions and stuff like that that's in there. But there's yeah, yeah, I appreciate it. Thank you. Anyone else? Yeah. Yes. Yes, it is. So here's what drives it. That's a good question because there's two things. If you look at every signal that's in the database, like just I've got a symbol up here right now. It buys low, and I always say we buy and sell on the right side, not the correct side, but the right side. So the bottom forms, it starts to go up, we buy the symbol, right? We'll just call it like a cup and handle, right shoulder low, right? When it goes up, it peaks out, and then it rolls over, and we sell on that breakdown. So the only time that we're going to sell as the symbol's going up and taking profits, a good example is the sales that we were looking at Apple, right? And it's going to sell. That's why it generates profit. Two things happen. There, we figured out, my original partner Dave and I, we figured out how to accelerate the growth of the capital through that allocation process. So there's there's an acceleration thing going on. So we're taking money. It's a gaming theory. So we have a bunch of, we'll just make them blackjack tables, and I've got a hot table, and I'm taking chips off of this, but I've been maybe a slot machine. I actually did this. I used to live in Lake Tahoe, and I actually went to this, and Jason's sister used to love playing some pinball machine, and I would go win all kinds of quarters and just give her buckets of quarters. And I figured out how to play this game where you're taking probabilities of what's happening and then placing them on what I used to watch these little old ladies have about 4 drinks and just burn about $100 in a machine, and that would be my probability would be this machine's going to hit, and I actually was looking at that. So same concept here is we're looking at symbols, and when you have a new idea, it forces to rebalance, take money off the table and it does it this way. It's top slicing. So we look at the symbol that has grown the most in the portfolio, and we chop. So, okay, I need to set this up a little better. So we have 10 symbols. Right now we have a 20% allocation, and so we have 5 of them are long, and we have 100% of the money used, right? We put 20 in each one. Now we have, let's just make it, all of a sudden we get 5 more new buys. So I don't have enough money to buy those other 5 symbols. So what we do is we will go to those symbols that are, we'll look at the total. I have 10 now, and I'm going to go to a linear allocation to 10%, right? But let's say of the 20, of those symbols that we originally bought 20, some of them grew to 27, some went to 30, so they worked. We're going to chop down, we're only going to sell the ones we need to raise the capital to buy the new 5 symbols. So we sell the ones that have grown the most, and the effects to the portfolio is very dynamic. Is one, we're taking money off the top of the big winners. So let's take an example like Tesla here. We're selling off a Tesla, lowering the relative risk in the portfolio to Tesla, but we're taking that money and making a new bet with that money with this new symbol. And so now in theory we have new probabilities and new idea and the probabilities for it to grow. If you go into like, whatever the trade profile page is, right? And you're going to say, oh, look, this one makes 30%. So we're taking money off the table from a Tesla and maybe 5 or 6 other stocks, throwing them on this new bet that is capable of making 30%, and it's a brand new idea. So that's what's going on with the allocation model. It says, hey, who's got the most money? Let's figure out a linear allocation across the entire spectrum. In the case that I'm telling you, hopefully this will make sense, is I went from 5 symbols to 10. Now I have a linear allocation. It's probably going to be 9.8. It's going to be a little bit undercut on that, just so we don't overspend the account. But let's say we just do it at the 10. So now I'm going to cut back the symbols back to 10 until I raise the capital. So I'm not going to have to sell everything. I'm just going to sell as few as possible to raise that capital, and then I'm taking the money from the ones that have grown the most and put into the new idea, which has, in theory, a lower risk and a brand new probability. Okay, so what happens, the end result of all this is not only did we take profits, we downsized the potential risk in the portfolio, and the redistribution gave us new probabilities of continuing to cause that capital to grow. And if everything gets hit once like we hit in February, then it's just a big dump job and you're running for cash and you're getting out. But most of the time you're getting these, when we were looking a few minutes ago, if I bring back that test portfolio that we built, you're going to see in the trade log, you're going to see these dynamics happening here throughout time where we're selling and reallocating, and it's all generated. Like here on 11/18, AMD had a buy and we sold. So all along, it's interesting as we go all the way back to November of last year, and look at who the same constituents in this portfolio kept getting sold down. We sold down Apple, Microsoft, now NVIDIA, all of those, Tesla. If we go to the next buy, same thing again. Here's the next buy. We had to do. Actually, there was actually some outright sells on some of these symbols. So we sold Apple out on February 3rd, and then somewhere down the road we bought Apple back. I'm not sure where it comes in here. Here it is. On 327 we bought it back. So all of those dynamics are happening, and that's what that reallocation is doing. Is changing the risk profile while also raising the probabilities of future profits in the portfolio. Right. Yep. Yep, exactly. Because what we're saying is, hey, listen, if those stocks are working and they're trending, we'll hold them. But now if we have more ideas than we have money, where do we get the money? And that was the problem that Dave and I were working on solving, is where we're going to get the money from and why. And how do we make the fewest amount of transactions while still giving the stocks that are trending the ability which to grow. And so when you start getting, and this is like, you folks all met me from my YouTube channel and talking about S&Ps and all this stuff and trading and all that. But this portfolio theory is much more in depth. And when you're running, this is money, how you run big money, and you start to put in, like, we can put in all 500 stocks in the S&P and trade every one of them if we want. And then all of these dynamics are happening around that set of stocks. And that's why I was referencing that really what you're doing is building your own mutual fund, and you have your own virtual manager of when to buy and sell, how much to buy and sell, and then these rebalancing orders. And then, as I showed you, you can go in and change the constituent list down the road. And I can, by the way, I could be, let's say this portfolio we built here right now, and we have these following active stocks in here. I could decide that at the end of July, I no longer want to trade Microsoft. I no longer want to trade 4 or 5 of these stocks. I'm going to replace them. I can make that decision today, and I can put the new symbols in, and I can schedule that constituent change 1 month, 3 months, 6 months down the road. I can do it today. And when that day comes, it will generate all the orders to sell out whatever the holdings are and to do those things. So you can forward think in this strategy. Yeah, welcome. Yeah, so I my IT guys sent me a message last weekend, and we uh, we've got a lot of emails in the system. We've always worked with institutions, and we're getting blown up on spam right now, and we've turned off the notifications just for the moment. So you're going to have to log in to get them. There was no way. Michael explained to me what was going on, and we're trying to find a solution. We've, like I said, we've never dealt with this type of situation in the past. Most of our customers have been institutions behind firewalls, and now we've got, I have customers in Russia. Maybe they're listening. I never thought I'd have customers in Russia. So, we've got a bunch of folks in Singapore and across the planet. So we've got some issues going on, and I'm not sure what the solution is. We were able to get a lot of stuff cleaned up in the system, as you know, from just using it. And we're just, like I told you folks in the beginning, and I'm true to my word. I try to keep my word. Is that we're going to keep getting everything working that is going to work, and then hopefully, as we go forward, we're going to be able to rebuild and everything. So, yep. Yeah. That I would say just go in there, click on it. All you have, the one thing you'll have here on the home button, it's going to show you right here if you have any orders. It says portfolio warnings and errors. Two things it will show you here on this page is it's going to show you exactly what, if you have any orders, or you'll also see something if you have missing data on any of your symbols in there. So if our data vendor doesn't pick up the data or something happens there, then we don't have very many. We actually use the same data vendor as Yahoo Finance, and our data is actually cleaner than theirs most of the time. We do a lot more cleansing. We have algorithms that look for certain types of errors when we run the data every day. So we're always perusing because it's GIGO, garbage in, garbage out. So if you have bad data coming in, so I guess I should say Jason, for the last 6 years, has been in charge of the scouring of the data. And matter of fact, the 4-letter word around here is data. So, yeah, that's a bad word. Most people don't understand what goes on with data unless you've run a shop like we have for 20-some years. So we're exhausting. Ram, you got to have something else, man. I know you're thinking something. I can hear it. Anyway. That's fine. I enjoy it. Listen, this is a great group of people. I love how engaged everybody is, and I think hopefully today was a little more insight in what the power of this thing can be. And it's not the prettiest piece of software out there, and there's a lot of stuff. I agree with some of the things that I would like to see on it, and we are going to start some meetings probably next week and going through Portfolio Expert, going to the next level, and just see where that goes. But there's a lot to understand. So this is a very, I don't know, I guess the best way, a very dynamic process. And this tool, even though, like for instance, the graphics, matter of fact, if you could flash back to year 2000 and picture going on to Yahoo Finance, the charts that we have in this software is the same charts that they had in Yahoo Finance in 2000. So it's pretty old and clunky. The new charts on Portfolio Expert are much better, and so we'll be showing all that stuff to you folks as we go forward. But this was, I feel like a good meeting to really start to bring in some perspective on how to actually use this, what it is, how to match the orders, and I'm glad that question got asked, because that was something I wanted to do. I just was wanting to get to your questions because I literally could have went for probably 2 or 3 hours on this. Yeah. Yes. Yeah, I can. Yeah, that's a good question. We used to have a vendor, but we had all the Canadian. We could do multiple currency type things. We could even do stuff in Switzerland and all that, and we don't have that anymore. And the problem was we were trying to do that once upon a time, and you build a portfolio and you're mixing currencies, right? So the values were all screwed up because it assumes that everything's in dollars. So I'm not sure if, you know, I'm not sure, Christoph, on how that would work. What I would suggest for you is one of the things that you can do. Let me go back to portfolio. You can go in on the portfolio manager, and let's just click on this. There is a download. You can open position CSV here. It's coming up on the other page. I'll slide it over. So this is the other place, folks, where you can get this. This is actually showing you on this page. It's actually showing you number of shares. I'm just trying. What did I click on? Yeah, positions. So this is a little different. This symbol ID is our internal, but here's the symbols, and this one's showing you the actual share amounts. And this share amount is always going to be based upon that number that you started the portfolio. So like this one was 100,000, but you have to go with the current value. If I go over here, 384. So it was the percentages break down to that number. It's best if you just go with percentages. What's the difference in price? What is it, 20% different? Roughly, what's it? Yeah. Is it 30? Yeah. I actually sold a house to a Canadian when it was about parity. It was the best trade that guy's ever made. Because now he owns a house in U.S. dollars, right? It'll do better than it'll do fine against Canadian dollar, but we'll see. You know, I don't know. Listen, I'm working on a project and a video that I think you folks will like. I got really intrigued. I don't know if I have an old acquaintance friend, a guy that I worked with, a guy named Hugh Hendry, is kind of triggered me. I'm trying to get a hold of Hugh and reconnect with him right now. And but one of the things that I think is going to happen is whether they debase the currency. I have no idea. But I guess if everybody's listening on this, if you want to watch a very interesting video, look at the princes of the yen. There's a video on YouTube. It's an hour-and-a-half documentary. Absolutely blew my mind. It's about central banks and basically what the power they have. And yeah, it's kind of triggered me to discuss some of the things that I believe we're going to be up against as we go forward, because we still go down this trail just a little bit. We still don't know what we're dealing with on this crisis. And they created a lot of new currency. And for the moment, the dollar is kind of hanging in there. It's still, if anything, there's probably a shortage of dollars around the world. So it's an interesting scenario, what's going on. So we don't know. And if it collapses, then we're probably all in trouble. So it doesn't matter where we are. Let's hope it hangs in there. But we have a lot to learn. So all right. Yeah, it's called. Let me go on the other page here real quick. It's princes of the yen. hang on one second here. Yeah, it's very interesting. I'm 20 minutes in it. And I have 2 pages of notes, and it just a lot of stuff. It has to do with the occupation um, of Japan, but how they restructured the entire economy, and how they purposely in '84 through '89 created the bubble in Japan. And one of my most famous moments in 1989, I was in front of about 600 people, and there were a bunch of folks, myself, Peter Eulides, Bob Farrell from Merrill Lynch. There was about 6 of us on a panel. And one of my most famous moments was I basically called the top in the Nikkei at 40-some thousand. And everybody thought I was a master of the universe at that time. But it was what led up to that expansion, and I guess to reveal some of my thoughts, I think we could be potentially entering in an era where we're seeing that same type of expansion in our markets in the U.S. This thing could be really out of control, but I don't know if I believe that most of not that the coronavirus isn't real, not that it has anything, so don't scream at me about coronavirus stuff, but this was but without little doubt, was a social, it's going to be an economic, social, and probably political re-engineering of the planet. That's what you're seeing. You can already see what China's done with Hong Kong and all the things that they've taken advantage of every moment of this thing. And then you see what the Fed's done. They've pumped so much currency in here. They're restructuring everything. They've created a whole new currency base out of thin air. We know that. And this is exactly what they did. When you watch that video, the lights will go off when you watch that video. So it's very intriguing. That's all I can tell you. Very intriguing what's going on here, and I've said this before, that the Fed is attempting to engineer a bottom, and they actually have done that at the moment. Does it hold? I don't know. I feel like every news agency, CDC, WHO, you name it, everybody's pounding, all these cases in COVID, which are increasing. Also, probably because we're able to test, but the mortality rate isn't increasing. But who's telling you that it might? Well, it might, and it might not, right? So it's a lot of fear mongering around this thing, and I feel like that unfortunately got to the market today, but that's part of the market, so that's what we have to deal with. No, I don't think you missed anything. I think it was everything I just said. The algorithms started to pick up these stories. They started to drive it down, and then they just, the markets are stampede mentality. We saw the stampede up yesterday. We took back, most everything, that we saw yesterday, and it's just a lot of noise in this thing, and I actually I don't know, because we started this meeting right after the close, so I couldn't find anything either, other than what I'm. That's the only thing I could figure out, because I kept seeing the stories. It's possible, but listen, algorithms run about 70% of the market. So, when you go in and buy a stock now, listen, I came from the world of actually being a physical human market maker, right? And those don't exist anymore. They're algorithms. And I've done some done some things with penny stocks and played with some of that stuff over the years. And I can tell you that last year, with a very small amount of money, I was able to double a penny stock just by trading against the algorithm. I figured out what I was doing. And, yeah, so yeah, of course they do, and these algorithms are looking at. There's some of them are very sophisticated, and by the way, a lot of these trading algorithms don't make any money. Some of them do. Some days yes, some days no. It's not any different than the humans. They're not like these guys are just pulling money out. There are some people that do pretty well, but the the reality is that some win, some don't, just like anything. But you see the one-sided trade. You can see if you watch how that thing traded today, it was pretty brutal coming in that last hour. There was definitely one-sided trade coming, and it was a stampede. So whether it was smart money, so-called smart money, or what it was, that's hard to tell, to be honest with you. But there was definitely a lot of selling. It was pretty ugly, and that last, it was pretty obvious. I saw they wanted to make a new low. I think we traded down to S3 on the cash today, and it was R2. It was S2 R1. It came a little short of R1, and then it turned south at the end of the day, and I think they printed it right down to the S3, maybe right at that number. I think it was 30 or something, or 20. What was it? It was right at 30 level, I think, 31 or 30. So yeah, I don't know. I don't know. I'll tonight I'll do some research and try to figure that stuff out for sure. You're welcome. Yeah, no, you're welcome. And guess what? We get to do live cast tomorrow, so more fun. I've got I'm going to have some questions for you folks. So tomorrow the live cast, I've got some ideas I want to share with you. But anyway, thanks again for everybody that watched. We had a lot of folks on YouTube. Obviously, we got folks on the Zoom meeting, so that's excellent. So if you're watching on YouTube and you're a subscriber to WaveTech, make sure look for that YouTube or the Zoom link when we send that out next week. Anyway, thanks again, everybody. Have a great day. You'll see me tonight, and we'll talk tomorrow. Thanks again. You're welcome.